Okay, good afternoon, smart money traders. Wanted to do this quick video about a tool I'm working on. It's an indicator that basically tells you the day of or before the trading day starts, where to look for support and resistance, which is very, very important because a lot of times people just look for the trend. Yes, you definitely want to trade with the trend, but also know when not to take a trade. Because look at this, for example, here in the QQQ, which is similar to the NQ. It's basically the same price action. If you look here on the top left, you're looking at the market open at 9:30. I mean, this indicator I'm working on, I can have it draw those zones at 9:30 when the market just opened. I can have it draw the zone at midnight or at 6 p.m., which is the Globex open if you trade futures. So it kind of works for stocks, futures, or ETFs, and definitely help you if you do zero DTE options. Definitely can help you here. If this market open up here, so we at a resistance zone. The red zones are resistance. The golden zone is more like a line in the sand zone. Below it, you want to try to sell. Above it, you want to try to buy. Again, based on the general, what the market is doing in general. It gives you a bullish bar. Then quickly, the bears took over. Then here, you definitely could be careful here not to buy here, because we have momentum going down. But once we have this happen, again, this was a support zone. The green zones are support. When this happened, right, what we're saying here, hey, the bulls try to react, but they get crushed again. So this an entry right here. And we're not talking about hindsight here. In hindsight, everything looks good. But once you get this candle closed here, you could definitely get a short here. If you're trading zero DTE again, I mean, at that time it was 1764. Like a 17 put would be great actually, or even a 716, because you know this thing may run. So how do you determine that? You say, hey, you know what, we'll go from here to down here, and then do a projected move 1 to 1. So at 1764, you go all the way down to, you could even do a 715 put, because you know, hey, it's gonna pass that. That's some money here on the QQQs. Now in that zone again, when we see this reaction, we're like, okay, we are still bearish, because again, once you break the support, I didn't close below the support, but once you break the support, you know, hey, at this point we may go lower. So this candle here could be definitely short, but at that point you already move 7 points. So that's when you have to factor in all those things. The ATR is usually probably about 7 points or so on the QQQ for any given day, which is about 1%. So at that point you extend it. Now, when you start going back up in that support zone, that's a big candle, because this candle here was pretty big, but also you gotta wait for you gotta factor in the retracement. This retrace, and you got another big candle above here is definitely clear. It's a clear buy, but you can even be very, very aggressive and buy, let's say 716 call. You know, you get to 718, you make plenty of money. We go back again to that line in the sand. So as you can see, the market kind of ping pong between those levels. Now let's go to the next day. Even this is the afternoon. In the afternoon, nice move down here for a put. Come back here and cover your position. You know, get out of the put. You could even buy a call here. Again, this is not hindsight. Those levels were there before, and we just know how to use them. So that is the overnight session. We're gonna ignore that. Overnight session. The next day, which was Thursday the 20th, same scenario here. We open higher. We open like on a bullish mode here, but from what we closed the night before, that was I think that was you opened down compared to where you closed before. Before you closed about 716.56. You open here at 712. Market gap down overnight, so maybe favoring the short here would be the thing to do. Even if you buy call here, 715, you probably don't make money unless you really get your target really not too aggressive. You're just going for a conservative target, maybe 20%. You probably make 20% here on your investment. After this candle, you let it center. One of my mentors used to call it, before you enter, let it center. A big candle like this usually is going to come in the middle of it. And this is what happened here at 712.80, 713, 714. You make some money here in about 6 minutes. Now, markets, again, around the line of the sand, we should expect this kind of movement. It goes back and forth here. Once you break down here, there wasn't not much room here, but the bounce here at the support happen. And on a day like this, let's say you're just bearish, so you're just looking for the bearish confirmation. Here, definitely could have been something you go short with a stop above here, meaning, hey, if the market gets up here, I'm going to get out of my position. But if you're trading options, it's definitely going to be a big drawdown for you, because if you short here, you're probably going to make some money eventually, but with data decay, you're going to definitely lose some money, some possibility. The best one is just wait for that pullback. That's kind of like, I would say, like a bearish flag here. Break this level. Maybe here you can go short and cover here and test the line descent again. You go short again, because some days you could clearly say, hey, I'm just going to trade the short side or the long side. And Thursday probably was a better day to trade the short side. Even though the long side down here, you probably made a little bit of money. Let's go through this again. This is Friday. Yeah, this past Friday here. Same thing, market kind of overnight. Market just went up a little bit, but it hit those resistance levels. Open down. That's a big candle to go short on. If you don't like to just chase here, you can wait and maybe go short down here a little bit in this retracement after this candle, particularly 710 maybe. Yeah, 710 put here, you still make a little bit of money. But again, it was a Friday, so Friday usually you're gonna see this kind of action back and forth. So after this candle close, I'm talking about this one here, this candle. After this one closed, definitely that's a safe way to go along here. Again, we're not talking about, because we know this is a support zone, and it goes right back to that resistance area, the line in the sand and this first resistance, which coincide, that makes that level even stronger. Again, usually when I'm trying to go short, I wait for the retest. It goes in here, come back, and give me now this candle. Again, this is not hindsight. This is just the techniques that I use to trade. That candle was the best short. You go down here and probably here, if you're trading options, 715 or so, and 714. I mean, you definitely hit a little bit of money here if you're trading options. Same thing with the NQ. As I said earlier, same action with the NQ. You know, on Friday, down, up. Definitely could have made money both this Friday. But anyway, I just wanted to showcase this indicator I'm working on here that shows you pretty much some zones that you should pay attention to go long or short based on your overall plan. Because a lot of time trade location is really paramount. You know, if you buy high enough, even though the market might be long, you probably lose money. It's too high to buy. Or if you buy low enough, it's usually in a down move like this. Hey, I'll wait for the market to bounce this area. Here I buy. I can make some money. So with that said, just wanted to do this quick video. And if you like content like this, I'm gonna show you some, I'd say, nice tools and ways to trade the market. Please like and subscribe. And also, I'm looking for some beta testers. Just comment beta in there, so when it's ready, I can contact you and let you know how to proceed to become a beta tester. Thank you. Take care. See you later.